Press subscribe.
Press subscribe.
Press the bell.
Press the bell.
Press like.
Press like.
Change your life one word at a time.
Hello, good morning. So, how is everybody? I've got my Irish moss, my sea moss, keeping my well-being up during these times. And what I always make my children say is also affirmations. I'm all about positive. What do you say?
I'm smart, I'm beautiful, I'm strong, I'm wise, I'm powerful. It's gonna be a good day. Thank you, Jesus. I'm black, I'm proud.
Amen. And you all know I'm a black belt teacher, all about my well-being. I'm also a maths teacher, all about those numbers. And it's not just about investing in the finance world. So I'm in Bitcoin, fintech, stock market, but it's also about investing in something higher than the financial world. So I've got my book there, Divine Wholeness. But this video is a part 2 to what we talked about yesterday, the whole of the fight between the millennials and the hedge fund managers and the people that are shorting. But what I see from yesterday, so you see the news are making it sound like the people that are actually bad are the people on Reddit, and the subgroup of the people on Reddit called the wallstreetbets. So say the 2 million people that decided ages ago we're going to keep buying Gamestop shares and not selling, and then now the problem is. So let me recap on some things, because with shorts, I did touch on my last video, but what the most important thing about why people sell shorts or get shorts is you are borrowing the short, you haven't bought it, and if the stock goes down, then you plan on buying it at a cheaper value. So if it was $10 I borrowed a short, I owed $10, but when it goes down to like $1, then I only need to now buy that short for $1. So essentially, I paid 10, I bought it for $1, I've made what, $9. So essentially that's how it works. But the problem we're having is when it doesn't go down. So this is what's happening with GameStop and Reddit and the community. They've been buying, because the other part of the shorts is you need to be able to buy it. If it went down to $1, for you to make your money to be able to buy it. But in the case of it not going down, you have infinite costs, infinite risk. It can go to the ceiling how much you owe, because you still need to be able to buy that stock to cover it. Because remember, you borrowed it, sold shorts, mainly people charging them interest on what you borrowed, and if it goes down, then later on you'll buy that short to cover your sell. But what happens when it goes up? And this is what's happened. So it's gone up, they've had to buy higher now, but the problem is some people are not even selling. So if they're not selling, the price is going up more and more, and that's where we talked about the short squeeze. Because the next part of this short squeeze, where GameStop is particular different, is these companies, so these hedge fund companies, are selling shorts. So remember, they're selling shorts to people, betting the company would go down or the price would go down further and things like that. So they sold shorts, then so they borrowed some of their clients' shorts, and also they borrowed shorts that they don't even have, which is the next thing we call naked shorting, that they shouldn't be doing. But they've done this once, say it's gone down even, and they've not then bought those shorts to cover what they should have. They've now put more short positions, waiting for it to go down. So they've got the original short positions, and the stock has gone down, so they've made some money, but they haven't yet decided to buy those shorts, buy those stocks to cover up those original shorts that they sold to people. They've then allowed to make more shorts. They got more greedy, saying it's going to go down further. They've made more shorts available, and then again, they've not bought the real stocks. So there's the amount of float, because remember we said float was about how much real stocks is available, because the outstanding shares is all the shares the company has to offer that's been authorized, the full shares that is locked with the investors inside, as well as those that anyone can buy. And then the float is those that's available to the public, and within that float you've got the short float. So remember, this whole problem is GameStop only has 65 million shares, yet there's like 70 million shorts. So there's more shorts than there's even shares available. And remember, those shares available were not even all of those that's in the float, because less is available for the float. Like 27% was meant to just be for the insiders. So you've got that 73% that was meant to be for anybody. And within that 73%, you got 140% higher on shorts. So that was the whole problem. And this came because hedge fund people like Capital and certain people were selling shorts, borrowing stocks to do this. Didn't, even when they made their money, they carried on borrowing more shorts, selling shorts, selling shorts, selling shorts. It's very greedy. So this is the problem. But yet the media is making it sound like it's more the millennials, the Reddit, people are hackers, people are market manipulation and stuff like that. But they don't talk about the real problem. How did something that's meant to be illegal called naked shorting, how can you end up shorting 100% of a company, saying all of it is going to fall, all of it's going to go to dust? And some people are saying, why should this even bother us? But it's an interesting thing, because the fight between the millennials and the fight between the older generation has many things we should think about. Remember, back in the day, not everyone had access to trading. Not everyone had margins. Not everyone had leverage. Not everyone could do, because all of that. So what's different now is the millennials, everyone's got margins, can get leverage. Because remember, leverage is about, I can have £1, but I can have more leverage, more like buying a house with a mortgage. I've got paid a little bit of it, but technically I've got the whole house I could play around with. Technically I could sell the whole house, even though I haven't yet bought the whole house, but I've got leverage. I've got the whole worth of that house. So the same with stock market. I might put £1 in there, but if I could get some leverage, the account I'm working with is actually could be £100 or £10. So I'm actually using more money than I put in. But if it goes bad, I'm still going to have to owe that money. But if it goes well, I've made a lot more money without actually using as much money as I had. So that's leverage. So now not everyone had access to that from back in the day. So the old generation, they had to do certain proofs and certain forms and experience to show you can manage an account with margins and leverage. But now access from Robinhood, Trading 212, people can just get margins and leverage easily. So that's one thing that this is now making the fight between the millennials and the old traditional investment people more funny. And then what else? We also have the fact of before, I've got now brain freeze. So we also got the fact, so I'll come to that actually. The next thing I was going to touch on was some people were saying it might not be a war, but why I call it a war is actually now the group on Reddit have decided that they're going to go for this one hedge fund, Capital, and anything they are shorting, any companies they are shorting, they are trying to squeeze that, do more short squeezing that company. So there's different ones happening, AMC, BB, Nokia, Fubo, there's many that GME just has to have a high shares interest. So shares interest is the percentage of their shares that in shorts, shorts interest I should say, the percentage of the shorts that is in play compared to how much in their float. So 10%, higher than 10% is bad, is high. Higher than 20% is very high. So yeah, that shares interest. So the companies are now, some people are looking at other companies that have high shares interest and see there's opportunities for more short squeezing. But what I see, and these hedge fund people have lost billions. And oh yeah, that was my other point. So even the shorting game brings up an interesting thing, because I don't do shorts, and now I realize why I don't do shorts, because I like to bet things will go up. For you to bet things are going to go down, essentially you're trying to profit, saying the company's going to fold, people are going to lose their jobs, bad things going to happen, that you're betting for bad things. So even the fact of people being able to short is questionable. Should we be shorting on a company? Because then when you allow shorts, you've got these hedge fund people, when they've got so much in shorts and they're going to profit from a short, then you see they're using the media, they're using the news to say this is happening to company, and they're trying to help that company to short, which again is illegal, but using media and different things, there's tools in play. And oh yeah, so that was what I was also talking about with the war between the retail investors or the millennials particularly, and the Reddit community of those millennials against this big hedge fund. What's going on now is that war of media as well. So you've got people, the media's trying to blame more on the side of the millennials, saying, oh, they're gambling, they don't know what they're doing, things like that, whereas they're not really talking about how did GME shorts get into this position of company selling more shorts than the company's even worth. You're saying 100% of that company is going to fail, it's going to go to dust. This is what it says, and more than that. So it should have never been the case. So this was part 2. But like I said, make sure we look at the blog, make sure we like, subscribe, press the notification, because the more later on we talk about Bitcoin and things like that, the more you own Bitcoin and things like that, the more you press like on these things, the more you'll be able to pump Bitcoin, pump YouTube, and everyone will make money. But also to find out more about less complicated things like just what is stocks, what is shares, what is ETFs, check out my website, jonathanlillywrights.com. I've got Finance Fridays, and I've got Coach Thursdays that can teach you. And as part of my book that's coming, You Are Rich, which you can prescribe for. And you can get this Divine Wholeness one available on Amazon, Kindle, and soon the audio version is going to be an Audible. So have a nice day. Make sure you have your Iris Moss, your sea moss, and take care of your well-being.